Hey crypto friends, so today I've got my cat t-shirt on and I'm feeling pretty good today, but for those of you who are new to the channel, my name is Garrett and I am a crypto day trader who absolutely loves trading with moving averages. And my overall goal here with my channel is to simply help other people, or other traders actually, in the most simplistic ways as possible. So in today's educational video, I'm going to be talking about moving averages and I'm going to be explaining what they are, why they're awesome, why they're absolutely awesome, and how I personally use them in my own trading as well. All right. Now, for those of you who love trading crypto or want to try trading crypto, if you are interested in using the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you are one of those types of people and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys, so we are just going to go ahead and dive right into this video here. So what the hell is a moving average exactly? All right, so in the very simplest terms as possible, moving averages are basically based on a calculation that realistically smooths out price data to identify trends over a specific period of time. That's basically the most basic definition that I can give here. They basically show the average price over a set period of time, like 20 days, 50 days, 100 days, or 200 days. And I just realized I'm saying the word basically quite often here, quite a lot here. So I'm sorry for that. But in addition here, the most popular types of moving averages are the simple moving averages and the exponential moving averages. And to put these into context, the simple moving averages, which is what I have open right here, this is my simple moving average right here, my white line, it is the 7 SMA. But anyway, the simple moving averages are basically a straightforward average of prices over a certain period of time. For example, I love using the 7-period SMA, all right, which basically adds up. It basically adds up the closing prices of the last 7 days and divides them by 7 to get the average. All right, so that is typically how the simple moving average works. All right. But with exponential moving averages, or EMAs, these moving averages basically give more weight to recent prices, making them more responsive to recent price action compared to the simple moving average. So this is my 7-period SMA here. I'm going to go ahead and turn it off, and I'll turn on the EMAs. So as you guys can clearly see here, I have got the 20-period, or the 20-day, the 50-day, the 100-day, and the 200-day moving averages on here. All right. The bottom one is the 200-day, the pink one is the 100-day, the purple one is going to be the 50-day, and then the blue one is going to be the 20-day moving average. All right. Now, as far as how you can use these moving averages, there's basically there's three main ways that traders use these moving averages, such as identifying trends, using them for dynamic support and resistance, and a lot of people use them for crossovers too. And I'll briefly explain how these moving averages are used in these specific manners as well. All right, so when it comes to identifying trends, you can use these moving averages to identify the trend simply by looking at the position of the moving average in relation to the candlesticks themselves. For example, if the price is above the moving averages, it typically means that the trend is bullish. And when the price action is below the moving averages, it basically means that the trend is bearish. So to show you an example here, this is kind of what I'm talking about when I'm talking about that, all right? So as you guys can clearly see here on the daily chart, price action right here is above all 4 of the most popular moving averages. So obviously the trend is is bullish here. All right. Now, here within this area right here, before it ended up crossing over to the downside below the 200 period, or below the 200-day EMA, you can clearly tell that this is more of a choppy situation. This is a choppy consolidation type of area. Okay, this just means that price is consolidating and it is just trying to find a bottom here. All right, but we have just recently entered into bearish territory, as you guys can clearly see right in here. So realistically, now that price has gone below all of the moving averages, it's technically considered bearish here. Okay, now It's a little different when you go to different time frames as well. For instance, if I move over to the 1 hour time frame here, these kinds of situations happen more often. So as you guys can clearly see right here, price action is below all of the EMAs right here. So obviously we are in a bearish, we're within a bearish price action right there. Now, as you guys can clearly tell right here, we did end up going above all of the moving averages right here for a brief period of time, but it did not have enough momentum to be able to go higher. Therefore, it ended up coming right back down and back below where it should have been all along and back to bearish territory right there. All right. So that is just a brief overview of how you can use the moving averages to identify overall trends as far as being able to tell if, shit's currently bearish or currently bullish. All right. Now, you can also use these moving averages as dynamic support and resistance levels too, all right? For example, in a downtrend, prices might bounce off of a moving average like the 200-day EMA, which would technically be a strong level of support at this point, all right? For example, I'll show you an example here on the daily chart because I can see one right now. For example, price ended up coming down and it went all the way down to this 50-period EMA right here, but it did not go any lower for this downward, for this specific downward movement here. In fact, it ended up bouncing off of it and going right back up and right back up, but it did end up coming back down again, and eventually we came down to the next layer of support, which would have been this 100-day EMA right here, and then we ended up bouncing off of that and going back up. And then lastly, on the last leg down, we ended up coming down and we ended up riding this lower level of support down here, which would be the 200-day EMA, and we ended up crossing below it because there just was not enough momentum to go any higher and go above any of the EMAs any further. All right. So this is a good way to be able to use the EMAs as dynamic support and resistance levels as well. All right. They work very, very well in these types of situations, especially in these macro situations here on the daily chart and the weekly chart and stuff like that. But lastly, traders also like to use moving averages for their crossovers as well, specifically the golden cross and the death cross, all right? And a golden cross is basically when a shorter term moving average, such as the 50-day EMA, crosses above a longer term EMA, such as the 200 EMA. Which usually signals bullish momentum overall, all right? Whereas a death cross is pretty much the exact same concept, but it's in the opposite direction, all right? For example, the 50 EMA crosses below the 200 EMA. That would signal increased bearish momentum and would signal that, shit's starting to get bearish here, all right? Let me go ahead and show you an example of that. So we will turn off the 100-day or the 50-day and the 100-day, and we will just keep open the 20-day, or sorry, no, we need to turn on the 50-day and the 200-day, all right? So as you guys can clearly tell right here, this would have been right in here. This cross right here, this crossover right here, we have the 50 period or 50, I don't know why I keep saying period. We've got this 50-day EMA crossing above the 200-day EMA, all right in there. That right there signals on the macro that we have got a golden cross right there. And obviously with the golden cross, it typically means price action is insanely bullish and we are moving to the upside. And that's exactly what we did for quite some time there. All right, so let me go ahead and find a bearish cross, or sorry, a death cross, all right? So as far as a death cross is concerned, I guess technically we've got one right here, all right? So technically we've got a death cross that happened right in here, and we did end up dropping from there, but we didn't drop very much, as you guys can clearly tell. Price action from this point on all the way to the bottom here, it did end up dropping about 44% or so. So that is a pretty good drop, but realistically that is what overall death crosses and golden crosses are, and a lot of traders end up using these in macro situations, all right? So overall here, there are literally all kinds of different ways that traders use these moving averages, and I'm one of those people who absolutely loves using moving averages. In fact, it's realistically, they're really the only indicators that I use, in addition to using price action and stuff like that, all right? But there's a lot of ways that they can use moving averages, except I use them a little bit differently, and I will show you how I personally use them, all right? So if we go ahead and turn on, so what I usually do is I usually only have the 200-day EMA turned on, and I have the 7-period SMA turned on as well. And the way that I use this, guys, is let me go over to my Solana chart here actually and show you an example of how I've used it recently, all right? Because I just got out recently of a couple pretty good shorts here, all right? So I've got my 7-period SMA up here, and the reason why I like the 7-period SMA is I like to use the 7-period SMA for my entries. And the reason why is because it gives a very, very short view of the averages, all right? And a lot of times, price likes to respect the 7-period or the 7-period SMA as well, as you guys can clearly see. So what I did here was, for instance, down in here, when price ended up coming down and we retraced on this first leg right down here on the daily chart of Solana, we ended up retracing all the way to the bottom of this support area, which was the top of this little area that we had back in here back in January. And we retraced down there and we ended up bouncing up and going up. But we did not have enough momentum to go any higher than this moving average. And in fact, the next candle ended up opening red and we went to the downside. So I waited until the end of this candle, or until this candle was done with, to form my bias and my overall confirmation of a continued move to the downside to the next layer of support down here. All right. So I waited and waited and waited, and once that next candle started to open and it started to go down, that told me that, okay, well, this momentum is building to the downside, and I should probably get in and short the shit out of this. So that's exactly what I did. I got in right about there, and I ended up riding it down to this next layer of support right down here, all right, which I ended up profiting. I had a 10x position on it. I ended up profiting about 130% on this one, all right, just within a 2-day span, okay? That is a pretty damn good area of profit right there, just for trading for 2 days. All right. So, and that is what I'm talking about as far as how I personally use these moving averages. I like to use them for entries because a lot of times price likes to bounce off of these moving averages, whether it's to the upside or to the downside. And that's exactly what happened right there. And then I watched it for the next few days or so, and I saw right down in here that price ended up crossing above the moving average. But as you can clearly tell, you're also looking at the price action also, which is the candlesticks themselves. And I saw in these candlesticks that the bodies of these candlesticks weren't very big at all, which overall told me, you know, in my head, that there's not enough momentum here for a continued move to the upside, all right? Because obviously if there's not that big of a candle body on these candles, then that tells me that momentum is not strong enough to continue going even higher. And the fact that we did not get a closure above, like a candle closure, above this support level right here, which is my orange line, all right? And because of that, we ended up going back down and retesting this level once again. And then we tried the 200-day EMA right down here. We retested it once again and then tried going up again. But once again, we didn't get that candle closure above it, and we didn't have any signs of continued momentum to the upside. So that told me that, all right, I'm going to wait for the next candle and see if it goes down. It sure shit went down, and I waited for the next candle to open, and guess what? It ended up going down as well. So that gave me confirmation right there to get into a short, and I got into a short right there, and I rode it all the way down to this next area of support right down here, because this was a strong layer of support right here, because we hit it once right here, we hit it another time right here, and we hit it another time right in here, all right? So because that was a good solid layer of support right there, I ended up taking profit right there, which I ended up making another 100% within another 2 days right there, all right? So, and that's the other thing too, is, I mean, if you're trying to be a crypto trader, you cannot be scared to short the market, all right? The thing with shorting the market is, I mean, yeah, there's a lot of people who don't like to short the market, but realistically, you're leaving all kinds of potential profits on the table if you are too damn scared to short this market, all right? If you're only If your only action is to go long every time, that's not going to make you, you're only making half of the money that you could be potentially making. So for instance, when we have big downward movements after a big strong uptrend, you want to be getting in on those those shorting opportunities, because you can make some pretty damn good money from those. So all right, guys, before I go ahead and wrap up this video, if any of you guys are looking for a safe space to ask questions or talk about trading, feel free to go ahead and reach out to me on X here at Garrett_N_stuff and send me a DM, and I will send you an invite to my free community Discord server, which is right in here. And it's just a good, solid place for you to ask questions if you've got them, if you're serious about learning about trading and want to, I've got some good, decent guys in there that help out as well. So if you're looking for a safe place to talk about trading or ask questions or learn, feel free to go ahead and join up. But overall here, guys, if you guys enjoyed this video and you got some decent value out of it, please be sure to go ahead and subscribe to the channel, hit the like button below the video, and leave me a comment below on your personal thoughts of what you thought of this video. And with that said, for those of you guys who stuck around and watched this entire video throughout the whole thing, I appreciate all of you, and I hope to see you all in my future videos.